This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India is unlikely to bind itself to a net zero greenhouse gas emissions goal by 2050, government sources told Reuters, despite diplomatic pressure from the United States and Britain to do so to help slow global warming. India is the world's third biggest carbon emitter after China and the United States and thus is vital in the fight against climate change currently focused on reaching zero emissions by mid-century or thereabouts. China has pledged to become carbon neutral by 2060 while U.S. President Joe Biden's administration is expected to announce a 2030 target for reducing emissions at a summit next month, and later possibly set a target date for becoming carbon neutral.
Renewed lockdown restrictions in Europe and slower than expected vaccine rollouts are likely to check a global recovery in fuel demand and make OPEC Plus oil producers take a cautious stance when the group reassesses output policy this week. With its extensive vaccination program, Europe was central to forecasts for demand recovery, especially as many Europeans were hoping for a return to normality by the summer and holidays abroad. That now seems unlikely. Germany, Europe's biggest oil consumer, has extended its lockdown until April 18 to contain a third COVID-19 wave.
Moving on to the top news in the energy sector.
A delivery margin requirement under ICE Clear Europe for the newly launched Murban crude futures contract could make it more costly for buyers to take physical oil delivery on the exchange, industry sources said on Tuesday. Buyers have to pay the exchange the full contract value of a cargo 3 days before the start of its pre-agreed delivery window, the sources said. ICE also requires payment in cash or collateral such as government bonds or gold, according to its website, unlike the Dubai Mercantile Exchange where traders can use letters of credit.
Oil prices slid on Tuesday as the Suez Canal reopened to traffic, while focus turned to an OPEC Plus meeting this week, where analysts expect an extension to supply curbs to offset disappointing demand prospects. Brent crude fell 31 cents, or 0.5%, at $64.67 a barrel by 11:11 a.m., 15:11 GMT. West Texas Intermediate U.S. oil was down by 47 cents, or 0.8%, at $61.09 barrel. Both contracts earlier fell by more than $1 a barrel. Ships were moving through the Suez Canal again after tugs on Monday refloated the Ever Given container carrier, which had blocked the passage for almost a week. A backlog of 422 ships which could be cleared in 3-1/2 days, the canal's chairman said. Next, we have the top news in metal markets. The European Union has imposed duties on aluminium products imported from China after an investigation showed that they were being sold at unfairly low prices, the EU official journal said on Tuesday. The European Commission, which oversees trade policy for the 27-nation European Union, has set anti-dumping duties of between 21.2% and 31.2% on Chinese producers of aluminium extrusions in the form of bars, rods, profiles or tubes. The tariffs are lower than the provisional duties of 30.4% to 48.0% imposed midway through the investigation.
China's top flat steel producers are primed for profit from a post-COVID-19 recovery in global manufacturing and goods demand in 2021. As well as from an emissions-cutting drive that will likely knock out high-cost competitors, sector analysts said. Prices for hot-rolled coil, flat steel rolled at high temperatures for use in cars, home appliances and machinery, has climbed 50% in the past 6 months as China's manufacturers cranked to life after coronavirus lockdowns were lifted in mid-2020. Steel demand from manufacturing is improving significantly and the ferrous sector will have the biggest supply shortage since 2017. When supply-side reforms slashed steel mill capacities, analysts with CITIC Securities said in a note.
We will now look at the top news in the agricultural sector.
The Russian government said on Tuesday it had extended an agreement with local sugar and sunflower oil producers to reduce the prices of their products with retail chains. The government said the current agreement, in place until the end of March, was extended until June for sugar and until October for sunflower oil. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.